All right, well, our top story this half hour. Amazon primes itself for the biggest deals of the year. Tomorrow marks the third annual Amazon Prime Day. And just like Black Friday, the deals are starting earlier than ever. Sales kick off at 9 o'clock tonight and run through 3 a.m. Wednesday. Joining me this morning is International Council of Shopping Centers CEO Tom McGee. Tom, I feel like I'm supposed to say Merry Christmas. I don't know, is this Christmas in July? Are people starting to shop now for Christmas?
Well, I think Amazon's Prime Day has created a new retail event in the middle of kind of a non-traditional, shopping time of the year. I think the concept is, it really plays to what I think is a big trend. You were talking about retail trends earlier, which is consumers are very price conscious. And you see it obviously in Prime, but you also see it in the success of retailers like TJ Maxx and Dollar General, et cetera. There are huge trends taking place in the retail environment. Obviously, you talked about Sears earlier today. There's significant changes. Technology is a big part of that.
But this year is different because it's going longer. This Prime Day is going to be 25% longer than it was last year. It's a day-breaking 30 hours it will be.
Yeah. I presume that they believe that they're going to have a very good Prime Day this year. I think it just plays to significant trends that are taking place in retail.
I also think in addition to the duration, you're seeing a different breadth in products that are offered from Amazon. And we're not going to see the full panorama of Amazon's grocery strategy, but we are going to see Prime Pantry. What do you expect to see out of Amazon in the forthcoming several years as they branch out into other areas of retail?
I think that Amazon's acquisition of Whole Foods or announced merger with Whole Foods, I think is a big deal. I think it speaks to the whole concept of convergence, which is, I think, a big trend in retail. I think in a couple years we'll stop talking about online versus physical, and we'll talk about retail, and retail will be multiple channels, but they'll really operate in a very synergistic way. I think that consumers have become accustomed to migrating across channels, whether it's in the store or online, and they expect kind of a consistent experience. I think millennials particularly, which are going to age into their prime consumption years, are going to really demand that. We're at a little bit of a demographic V right now from a retail perspective because you have baby boomers that have transitioned out of their prime consumption years. My generation, Generation X, is just smaller. And so, if you look at people in their prime consumption years, there's 21 million less people today than there would be baby boomers at a similar age in prime consumption years. And the millennials are bigger, but they haven't yet aged in their prime consumption years. But they want different things.
All right.
They want experience. And they want service.
So Amazon Prime Day starts 9 p.m. tonight, ending at 3 a.m. Wednesday morning. Retailers will also have to grapple with a new TV sales behemoth. QVC is merging with the Home Shopping Network in a deal valued at over $2 billion. QVC's parent firm, Liberty Interactive, would buy the 62% of HSN that it doesn't already own. The home shopping giant would become the largest TV commerce company and the third largest in e-commerce, only behind Amazon and Walmart. Tom, how will this deal reshape retail?
I think it's all part of this larger trend. I mean, I think it's consolidation. I think you probably have to ask them in regards to why they think it makes sense. But to me, it seems to me that the benefits of consolidation, price synergies, supplier contracts, et cetera, are going to benefit from that.
Where do you think it'll go competitively when essentially, QVC, the concept is really entertainment. It's developing these personalities and attaching products to personalities and having sort of loyal viewers that like to watch and then learn and sort of feel like they have an experience with the seller of a product. So competitively speaking, where do you see it going?
I think it actually speaks a little bit to what you were mentioning earlier, which is experience, this whole concept of having a sense of a relationship with a product or the offer of a product. It speaks a little bit to the millennials, focus upon wanting to know sourcing, social good, et cetera. All those things play into kind of consumer appetite.
So how much more blood on the floor is there going to be among traditional retailers who haven't made the transition or made it awkwardly?
I think there's going to be...
what does that mean for malls?
Yeah, I'm bullish on the industry in the long term because of demographics, because you have this huge millennial generation that's going to age in their prime consumption years. I think what we often use the term retail real estate. I think that's a little bit misleading because malls have really become consumer real estate. And so while you have a reduction in retail that's happening, you have an increase in things like restaurants and food and beverage that are happening. You mentioned jobs earlier. There clearly has been a decrease in retail jobs, which is tragic. But there's been an increase in food and beverage jobs. There's been 1 million new food and beverage jobs over the last 3 years that are, tend to be new restaurants that are opening up in shopping centers.
But the economic trend shift. There's been a pickup we saw in last week's jobs numbers of packaging jobs, logistics, transport, shipping, UPS-related jobs. And so you see a pivot from retail storefront clerks to people who are distributing product.
Yeah, I do think you'll see retail also, and retail stores and retailers begin to use the benefit of their physical footprint for things like online and convergence, right? You see Walmart beginning to do that with their digital strategy, and even starting to offering a discount if you buy something online but go to pick it up in a store, because when somebody's in a store, all statistical analysis suggests that they're going to buy something else. And so they're using that as a competitive advantage.
So looking at several businesses that have gone belly up so far this year, just last week, designer jean company True Religion filed for bankruptcy, joining a growing list that includes The Limited, Wet Seal, Route 21, Radio Shack, and Payless. However, over 87% of sales are made at brick and mortar. So Tom, what's your take on all of this?
I think retail is a very competitive business. It has been and always will be. There is a lot of attention that's clearly given to store closures, and appropriately so. But a lot of those store closures tend to be announced, and bankruptcies tend to be announced in Q1. That's just historically how this industry works. I think some of the statistics that are out there in regards to where that'll annualize over the course of the year are probably overstated. And what isn't talked about is new store openings. I mean, there's been 3,000 store closures that have been announced, but there's been 2,000 store openings that have been announced as well. So I think there's clearly change going on in the industry. Nobody should dispute that, but I am optimistic about the health of the industry. And even Amazon. Amazon's an incredible success, but Amazon's an $80 billion retailer in North America in their 10K. $80 billion compared to almost $5 trillion of retail sales. I mean, there's a huge amount of sales that happen in this country that don't happen because of Amazon. But Amazon is clearly influencing the industry and driving it to change.
Tom, a question for you on markets. If you look at the high yield spreads within retail, they show around 4%. It's very tight relative to some of the headwinds that the sector is facing. Do you think that ultimately the default rate within retail will exceed or under 4%?
Boy, if I knew the answer to that, I would be in a different business. I think that retail...
You'd be in our 400 list.
Exactly. It's hard for me to predict how that'll play out. I do think that if you look at occupancy rates in the industry and use that as a sign of health, which I think it generally is, in all segments across, whether it's malls, open air, traditional grocery anchored segments, they're at historical highs. I mean, you're at 93% kind of occupancy rates. I would look at that as a source of strength. I do think there's a little bit of a kind of contagion that's happened in regards to some of the high name, iconic names that have announced struggles that have cascaded over the broader industry that I don't think is warranted.
All right, and there's